Deirdre, the companies look similar on your phone, but not necessarily as public companies.
Yes, they're both ride-sharing companies, have similar businesses, but they could look like very different public companies. They could trade very differently. Lyft's co-founders, they're reportedly looking to go the way of some of the biggest tech IPOs of the last few decades, Google, Facebook, Snap, that is maintain control of the company through a super voting share structure. Uber, on the other hand, its governance structure, if you remember, was overhauled last year when SoftBank became its largest shareholder. The deal limited founder Travis Kalanick's power and put in place a one share, one vote structure. Now, each would have important ramifications for how they are traded when they become public, as both have indicated they would this year. If Lyft co-founders John Zimmer, Logan Green, they take near majority voting control, Lyft will be largely immune to attacks from activist investors, but it will also be able to resist changes in discipline if the company struggles. Now, that could be interesting, given that Carl Icahn, one of the best-known activist investors, is an early Lyft investor. Now, we have seen dual-class shares play out with Snap. Founders Evan Spiegel and Bobby Murphy, they control about 90% of voting power, and public investors can't do much about its sagging performance and the executive exodus that we've seen. Now, a sunset provision for Lyft may be one way for the company to maintain control for a period of time, while also setting a timeline on those dual-class shares. Uber, though, when it goes public with a single class of stock, it's more likely to be included in stock indexes and index funds, but a potential drawback of its structure, it could be more exposed to short-sighted investor demand. So, John, I don't think there's one right way, but they certainly have ramifications for how those companies are going to be traded.
I mean, it's interesting to me that Uber is going this route. It seems like every hot IPO over the past decade gave founders preferential treatment. Is there kind of a backlash post-Snap in particular to that? Plus, I guess the fact that Uber had some reputational issues earlier.
Right. I think there is some backlash, right? We had the S&P index say that they weren't going to accept companies. That's why Snap's not included. But Uber doesn't have a choice, because even if it wanted to have that dual class structure, all the drama it went through a few years ago limited Travis Kalanick's power and put in place a one share, one vote structure. So that was part of the deal, how they got money from SoftBank. So they can't, even if they wanted to.
Yeah, well, could end up in a way being good for them.